Time to talk big tech. Thank goodness Dan Ives is here. What a week. All right, I've seen him a million times talking about everything, but now you've had time to digest it all. Dan Ives, Managing Director, Equity Research, Wedbush Securities. Thank you for being with us. So you're saying this is the next revolution, the fourth revolution since 1995. Tech again. Tell me why. This is the blow-up moment?
I mean, last night, that was pop the champagne type of earnings from tech. So any questions about monetization, that was a pound the table moment, in my opinion, because it's showing that this phase of this AI revolution, the monetization, it's now hitting. It's starting, of course, with Godfather of AI, Jensen, and NVIDIA, what we see in Redmond with Nadella. But now look at Alphabet, I believe Amazon and others. This is just the start of $1 trillion tidal wave hitting tech.
I disagree with Ross in terms of what he's talking about, saying that this is not important. I mean, because I could argue Tesla over the coming years could be one of the biggest AI companies out there. And look, for Musk...
Yeah, but Elon said he's not going to build it unless he has 25%. That's the problem.
Yeah, but again, if you look at this conference call and how he laid out the vision, Ross, and obviously all the criticism going in, if there were 5 things that he needed to show, I think he showed all of them. I actually think investors, and I've heard from some, come out of this conference call viewing Tesla dramatically different than the train wreck, and we've talked about it, that it felt like the last few months. And again, it goes back to finally there was an adult in the room.
But Dan, you're discounting the end of the call with Martin resigning, and you and I have been working with Martin for a long time, and he is the glue in management and shareholders and investors, and he continues to lose seasoned top executives during this really important transition, and I find that to be concerning. Despite what I do agree, the vision he laid out is one that we've invested in and hope happens, but it just seems like there's this talk and vision, and then there's this like reality we're seeing under it, which just doesn't look anything like the talk.
Yeah, and I think now it's really a prove me going forward in terms of for Tesla. But if you look at how they've laid it out with the vehicle, the sub 30K being accelerated into next year, the FSD in terms of laying out the AI vision, I believe right now you have just dramatically bad news baked in for what I believe, could ultimately be a company that's worth $1 trillion, $1.5 trillion, $2 trillion when you look out in the next 4, 5, 6 years.
Over the last month, Tesla stock has been on an insane roller coaster. There were questions over demand for the company's cars and whether it'd release a new affordable model or not, which caused the stock to take multiple hits. Then, the company's CEO, Elon Musk, announced on X that Tesla's long-awaited robotaxi model would be revealed in August, sending the stock higher. But Wall Street wasn't ready to go all in on robotaxis, and analysts kept downgrading Tesla stock. The price continued to fluctuate before the company's Q1 earnings call, in which Elon said that Tesla is planning to release not one, but multiple affordable models, a statement that served as music to Wall Street's ears. The affordable vehicles news caused the stock to jump over 19% in the last 5 days, and even had analysts like Dan Ives seeing the praises of Tesla, clinging firmly to their bullish stance. But there's more to the story than affordable vehicles, which is why we're going to explore why Dan Ives believes that Tesla remains a compelling investment and why being bullish on the automaker is the right way to go. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's talk about a name that you've liked a long time. You pulled your price target down, Tesla. Still like it. Tell me more. Why? Where does it get to 275?
This was a moment of truth, and the adult in the room came, and it was Musk. I mean, gave the sub 30K vehicle, accelerated going into 2025. The growth story on the other side, this autonomous AI, robotics is there. Now it's all going to be about driving volume. And I believe the bottom's in the near term in Tesla. And as they now start to see what I believe as demand starts to accelerate over the next few quarters, the cost, the COGS continue to go down, their ability to produce these cars cheaper. Look, I think for Tesla, me and you have talked about this for many years. You're going to go through these fork in the road Category 5 storms. Musk will navigate through this, and I believe that this is just another period that they'll navigate from. And I think that was a huge starting point coming out of that conference call.
He's got to get those lower cost vehicles, whether it's one or two models. He said it's like riding a bike to put out a cheap vehicle, like he could do it with his eyes closed. But if he could do it so easily, why didn't he do it already?
Look, they were going to do Model 2 next-gen vehicle, which is obviously a lot more complex. This is essentially a Model 2.5. But the writing's on the wall. They recognize what they need to do. All you need and must do is give the blueprint. I think we'll get more in terms of robotaxis August 8th. Shareholder meetings are going to clear up as they move to Texas and the comp package. Look, there's always going to be a lot of noise around the story, but I believe this turnaround now has actually begun in Tesla.
During Tesla's Q1 earnings call, Elon Musk said something very interesting about how the company should be valued. He said that Tesla is way more than a car company and that analysts and investors should start valuing it like a tech or AI company instead, since it's way ahead of the competition when it comes to areas like full self-driving. That doesn't mean that Tesla is doing badly as a car company. In fact, it has a dominant position in the EV market, with a global market share of about 20%, and it also has around 50% of the US market. Still, many analysts, including Wedbush's Dan Ives, are starting to understand Elon's point and seeing Tesla for the AI giant it really is. So, will Tesla really become one of the world's largest AI companies in the future? Let's find out. Hello everyone, and welcome back to Investocracy.
On August 8th is when we're going to hear more about robo-taxis and stuff. What do you do with the stock ahead of that day? Do you buy it, sell it? I mean, remember the Cybertruck and then the window broke or whatever? But the Cybertruck has been exciting, though there's been some recalls. But he's gotten out more Cybertrucks, I think, than people thought he would. So what about this August 8th? What would you do with the stock ahead of that August 8th day?
Well, I think you buy Tesla stock here. I mean, to me, they laid out the strategy. They did what they need to do. They ripped the Band-Aid off, street numbers. I mean, there were more, super amount of downgrades out there. Bearish. Look, the Uber driver in New York City is bearish on Tesla. So the point is, I love that setup, which is why we've been kind of pounding the table here as a setup into what I view into year end.
I know you said that he showed up this time, right? Because last time he really didn't give a vision, he didn't give much, and people were very frustrated. There was worries that he was distracted. Does one conference call where he shows up and says, here's what we're going to do, is that good enough? Do you feel he's less distracted? Was he distracted? Well, I mean, what happened? Is he less distracted now? By the way, I mean, everybody has Tesla. They love Tesla. So I just would like to know what you think.
Look, it's a great start, and you needed Musk, as he's done for many years, lay out the strategy. I'm not saying there's not going to be other distractions going forward, but this is complex what they're trying to do. Competition's increasing. Obviously, miscalculated a bit in China, but I believe they understand what they need to do to get to 2.5–3 million units. You needed a pilot on the plane. You didn't want Ted Stryker. And Musk was ultimately the pilot on the plane. Now investors feel much more comfortable owning the name than they did to start this week.
When looking at Tesla's 2024 Q1 earnings, we'd see that, for the first time since 2020, quarterly revenue dropped by 8.5% year over year, coming in $950 million below expectations. Meanwhile, operating margin hit 5.5% compared to last quarter's 8.2%, while operating income was $1.17 billion. Even though Tesla's earnings came in below expectations, the stock soared thanks to Elon's bullish comments on upcoming affordable vehicles and a robotaxi network, which have completely turned things around for the company on Wall Street. Dan Ives, for example, said that he was bullish on autonomy and robotaxis, but he didn't think they'd be enough to help Tesla in the near term because they need another 5 or 6 years to really scale. That's why Ives believes Tesla having an affordable vehicle is more important, and whether you agree with his opinion or not, it seems like Elon and everyone at Tesla are deciding to appeal to both Wall Street and long-term investors, saying that the company will both solve autonomy and produce cheaper cars. This could be one of the reasons why Tesla stock is a safe buy, as it has a strong competitive advantage in the EV market, a visionary leader in Elon Musk, and a loyal customer base that supports its mission to solve autonomy in vehicles. One big reason for Dan Ives' bullishness on Tesla stock is Tesla's position as a leader in the EV revolution, as he sees a future dominated by EVs, with Tesla at the forefront. Ives is also betting that even if Tesla stumbles a bit now, its lead in technology and brand recognition will propel it long-term. We've all seen how impressive FSD has become in a very short amount of time, and it continues to improve more and more as Tesla updates it every week or two, and this alone indicates that the company is very close to solving autonomy. In fact, a video was recently posted on X showing a Tesla car running on FSD version 12 in Germany, which indicates that an FSD launch in Europe could be very soon. Also, the company recently launched the enhanced autopilot monthly subscriptions in China, which could be a stepping stone before it introduces FSD to China as well, opening up new sources of revenue and boosting margins. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
That being said, how about EVs versus hybrids? You know, there's not going to be any hybrids over at Tesla. And Ron Barron and Steve Wesley and many folks say EVs is where it's going. Even though some of the committees have been pushing Ford and GM and all that to go with hybrids, the truth is that I think they're more expensive to make, and you think about the batteries and whatever, that it's going to be EVs. Do you think it's going to be EVs over hybrids in the next 10 years?
Look, I think we're definitely shifting where hybrids will be some of the opportunity for names like GM4. I think that's why, especially GM, they're doing all the right things with Mary, out in the 313. Over the long term, EVs is going to be massive growth. But I do believe you got to call it like it is. It's been a sobering moment for the EV believers. You've seen demand come off, but you're still going into one of the biggest transformations in the auto industry in 50 years.
Tesla is still making waves in the EV industry, unlike most of its competitors who are struggling to keep their heads above the water. And even though it took a massive hit recently, Tesla stock momentum is changing for the better. During the earnings call, Elon Musk talked about how a lot of automakers are switching over to hybrids and how that isn't the right thing to do right now, as EVs will completely dominate in the future. He might just be right, as the EV market is expected to hit approximately $1.6 trillion in 2030, and while the market for hybrids is expected to grow at a similar rate, EVs will likely dominate as government subsidies for them increase all over the world, and as newer and more affordable models come out, including Tesla's affordable models. And Tesla is already making sure that it'll dominate the market in the future, recently inking strategic partnerships with battery giants like CATL and LG Energy Solution, which will allow Tesla to increase its production massively. No doubt, there are valid concerns about competition heating up in the EV space, and production hiccups can throw a wrench in the best-laid plans. But for now, analysts like Dan Ives seem to believe that Tesla's strengths outweigh its weaknesses. In other words, Tesla investors should be looking at the long term, betting that Tesla will continue to disrupt the auto industry and emerge even stronger in the future.
On Tesla, some of its recent woes, where it's going, robots. I'm just going to say robots over and over again. Let's take it to our leadoff panel. Joining us on set tonight, Wedbush Securities Managing Director Dan Ives and Gerber Kawasaki President and CEO Ross Gerber. Dan, first to you. Numbers were, I was trying to be polite. I said less than optimal. Maybe less than Optimus is what I should have said. Phil kind of laid it out. What was your biggest takeaway from the quarter?
Tesla needed an adult in the room, and Musk was the adult in the room on this conference call. The big thing, the most important thing is that they are not going just straight to autonomy. A Model 2, a sub-30K vehicle, will be out, and that's accelerated. And that's music to the ears of the street. You went in, investors were expecting a disaster and another comedy show conference call. Instead, you actually have a pilot on the plane navigating, and it's not Ted Stryker.
Nice airplane reference. Ted Stryker? Ross, what was your biggest takeaway from the quarter, from the guidance, anything that, I mean, investors like it, but the stock has, I don't need to tell you, has been in a rut the last number of months.
Yeah, I agree with Dan. Elon did a, Tesla, what I call Tesla Elon, which is the Elon that people like in this call, which was definitely necessary. And he certainly didn't poo-poo the idea of having a $25,000 or less model, which is irrelevant of the financial deterioration of the overall fundamentals of the company. So I think if you look at Tesla, like robots and robot cars, and obviously thinking that this is going to happen in 12 months is probably a little bit aggressive. And we all know that Elon's timelines are usually 3 to 4 years aggressive. But that said, that vision long-term is wonderful. It's just the transition to this and what it will look like financially. It seems for sure that shareholders will be sacrificed for mass adoption of EV vehicles. So profits and margins that we expected on Tesla will continue to probably go lower, even though volumes might go higher.
We haven't even mentioned Optimus or Tesla's robotics business yet, but it's all the more reason to be bullish on Tesla. Elon said in the earnings call that he expects Tesla to be able to sell its robots externally by the end of next year, and that's not the only thing he said about Tesla's AI capabilities. According to the Tesla CEO, if somebody doesn't believe that Tesla is going to solve autonomy, then they probably shouldn't be an investor in the company. He even went as far as saying that Tesla would be able to solve autonomy even if he wasn't involved, which shows how confident he is that the work was close to completion. He also revealed the true scale of his AI-related ambitions by disclosing that Tesla's AI training compute capacity will increase by around 467% year-over-year to 85,000 equivalent units of NVIDIA's H100 GPU by the end of 2024. Tesla will definitely use this AI training capacity to train and develop its FSD software, and maybe even Optimus, to make them a lot better than they already are. And while many people remain skeptical, Tesla is definitely well positioned to become one of the top AI companies in the world as FSD takes off. As a car company, Tesla has strong potential to dominate the industry in the future, and with proper execution, the company is likely to achieve most of its planned projects, all of which could lead to the stock skyrocketing and reaching the $2 trillion valuation Dan Ives talked about. While the company may face some risks and challenges, like regulatory uncertainty, production bottlenecks, and increasing competition, at the end of the day, Tesla is the only EV company actually making money and not burning billions while achieving nothing. For this reason, we believe that it will continue to grow. And who knows? Maybe it'll even surpass the $2 trillion mark and reach $5 trillion like ARK Invest CEO Cathie Wood predicted. In fact, Elon recently agreed with one of Wood's opinions on Tesla, calling the company the biggest AI project on Earth. For now, we just have to hold on to our Tesla shares, wait and see. So, what are your thoughts on Dan Ives' latest comments on Tesla? Is Tesla stock a buy now? Let us know your thoughts in the comment section. If you would like to know what Tesla has been up to these past few days, then go ahead and click on the next video on your screen. See you there.